Hello everyone, welcome to the video. So in this video I'm going to go over the basic concept of liquidity and how to easily spot it on the chart. Now first thing is liquidity will have different strengths on different time frames, because to make that candle you need a stronger amount of volume if you're going for the weekly candle, and obviously if you're making a 1 minute candle you only need a little bit of volume. So the higher the time frame, the stronger the confirmation. So liquidity comes in many forms. You have a clear doji candle like that. So that is a doji candle, liquidity at the top and liquidity below. So that's the first one. Then you have a flat top like that, when you have no wick at the top or bottom, either end, and the one that has the flat top has liquidity above it. So that is another clear liquidity. If you got a flat top above and below, then you got liquidity either side. Then you have got the previous highs. So if you got lots of candles like this, and this is the last swing, then that is your liquidity. That is your main area of liquidity. So let's say you had, these are all candles by the way. So you had an upwards move, made a high and then came back down. That has liquidity above it. So we have previous high liquidity. Then those previous high liquidities may create double tops or double bottoms, or triple tops or triple bottoms. You can get them in multiple amounts. So here is a clear double top. So they have to be basically the same level. So this candle has to be the same as that candle. If this candle goes above it, it's already taken the liquidity from this previous high. So it's not really a good confirmation. You want those two top candles to be exactly the same height. So you want the wicks to go above exactly to the same height. This one can be a little bit lower because it still hasn't taken the liquidity from this side. So be on the lookout for that. So it's the same in reverse when you look for double bottoms and triple bottoms. It's the same low, which have got to be the same sort of level. It's better to have it to the exact level. You can see that detail though on your candles on the chart. Next one we have is the imbalance. So you have a candle like this and we're going down, and you have the candle jumps a bit and then continues down like that. This gap here is an imbalance. That means there's a gap in price and a candle needs to fill that to balance out price. So that is another bit of liquidity. So most of the time price will come back to that area to fill it in. Another kind of imbalance is when you have a candle like this, goes down like that, and then you create another candle like that, something like that, and then you have the final candle which is a bit lower like that, and this area here between this wick and this wick, all there is body. So that is a fair value gap, liquidity void if you listen to ICT, but at the end of the day it's an imbalance in price. It is liquidity for price to target. So it needs to come back up and fill in that imbalance or liquidity area. And the last one I'll go over is a clear trend liquidity. So when you get price going in one direction and it's creating wicks all in one direction, and you're getting this clear trend line like this, and all the wicks and bodies are matching up and you can see a clear line going along, that is clear liquidity that is likely to be targeted later, because it can be seen very clearly by retail traders. So they're more likely to use that as a target later on in price. Price is likely to come back to that area and target it later on. And that is trend liquidity. And that is the main areas you want to be focusing on. The main ones I use are the double tops and the trend liquidity and the gaps. If you get gaps in price or imbalances, then that is likely to be targeted too. So let's go to the chart and I'll just show you a few examples. Now when you're practicing this, practice it on US 30 because it uses liquidity very nicely and it obeys and displays it very well, especially when you're learning these things. So I'm going to go by this chart. Let's just get rid of this bit so you can see a bit more. So what US 30 normally does is focuses on the previous highs and previous lows, liquidity. So I'm going to get a line up and mark it in orange because that's what I mark liquidity in. And you can see if I just start putting it at previous lows, you can see how price has taken that area. Even on the smaller time frames like here, price has created liquidity. You have previous lows here, doji candle, and price came down to take that liquidity. So you have liquidity being collected on the smaller time frames and you have liquidity being collected on the higher time frames. If you want a free trade on the higher time frames, then you can see here this line here as a double bottom, and that is likely to be targeted next. So price is likely to go down and collect that in the next few weeks. Back to what we're focusing on. Price is currently going up, collecting a double top here. So if we zoom in at that level and get a line out, you can see we have got a double top at that level, and that is currently being collected. So there you go. This candle here, it's got a double top with this candle here. So that's a swing high, and that's a swing high there, and that created a double top, and you can see price is going to collect that now. It's just collecting that liquidity. So that is aiming for clear liquidity. But upon doing that, it has created a clear doji here in green. So that's at the bottom of the swing. We have a clear doji candle there, and next to it we have an imbalance in price. So you can see on this green candle you have no wick at the bottom, so that's a flat top, flat bottom liquidity, and you have a gap between that candle and that candle. So price is likely to come back to this area later on once it's gone up and started collecting the buy side liquidity. You like to get a reversal to the downside to take that either later on today or tomorrow, depending on what its main objective is. You also have a clear doji here. This was yesterday. You have an imbalance on the next candle, so that is liquidity and liquidity there, and you can see how price went up, came back down and filled that in and collected the liquidity below it. So here you have a doji candle, you have a previous low liquidity, and you have an imbalance in price, all at that same level. You can see how price came down, just went below it, and then you got the start of a reversal. So that is kind of how price acts all the time, on mainly on US 30, because that's what I focused on. It's easier to read. And you can see here we got a gap, price came up and filled in that gap. Simple as. The main objective is finding liquidity and what direction has support on all time frames, and then you will get a kind of understanding on how things are playing out, and that should give you a nice trade setup. What you want to do is take liquidity from one side, give you a setup for a reversal to target the other side, and then you have a trade setup. And you can see down here on the 30-minute time frame we also have a flat bottom there on this big green candle. So you're likely to get a reversal soon to the downside to target all that sell side liquidity. I'm going to leave it there. Thank you very much for watching. Hope that helps. Take care and goodbye.